Hi everyone, welcome to the session of our web series Fireside Chat with Champions, in which we interview global business leaders asking them crowdsourced questions relevant to the biggest challenge we face today, COVID-19, and its impact on various aspects of business and the way we can steer ourselves in current uncertainties. Today we have a special guest with us, Jason Choo. Jason is the executive chairman of his family office, Lonsdale Capital, based in Singapore. He is also the founder of a social enterprise fund under the family offices called Lonsdale Social Innovation Capital. Jason is amongst those very few business leaders who have mastered the art of investing in both Wallstreet Impact Businesses as well as social impact businesses. His business experience crosses borders from Wild West to Far East, Canada to Singapore, and many countries in between. Another very, very important aspect of his awesome personality is that he is at ease in dealing at high table with legends like Warren Buffett on one hand and emerging social entrepreneurs on other. It is my privilege to have learned a lot from Jason, and thanks Jason for accepting our invitation. I would request you to let our viewers know a bit more about you and your current business interests and activities.
Thanks for having me, Deepak. I really appreciate it. So as you mentioned, primarily I run my family office that's based in Singapore. I'm actually Canadian, but I've lived in Singapore for about 25 years now. So we've always run the investment portfolio out of here. Investment portfolio is quite traditional. We focus, you mentioned Warren Buffett, that's sort of my mentor. We focus on deep value, long-term investing. And over the years, we've done pretty much anything. We don't take third-party money, so we can do, whatever we want. So we've done everything from, buying blue chips in the US to distressed debt in the Ukraine and everything in between as well. We do some private equity stuff, bonds, debt, as I mentioned. Vast majority of the portfolio is just straight equities where, I'm an equity analyst at heart, I guess, and I like to buy businesses and hold them for a long time and watch them grow and mature.
Awesome. So you're having a
maybe if I start to sorry?
Please go ahead. Yeah, please go ahead. Yeah, please.
Yeah, sorry, I didn't catch the internet was a little jumpy. So about 6 years ago, we started to look at more socially responsible investing. So we started out sort of as an exclusion model. So we started to exclude certain types of investments like oil and gas and things like that from our family office portfolio. And then probably 2+ years ago now, I decided that we wanted to take that a bit further and to start looking for businesses on an inclusive basis, which means basically businesses whose main purpose is for some social angle, not businesses that are doing something and they happen to to have a social angle as well. So it's really about the intent of the business. And so I set up, as you mentioned, a small fund that's funded by the family office that really is looking for much earlier stage companies than what we're traditionally used to doing in the private equity space. So we're looking for very, energetic and passionate social entrepreneurs who need funding from anywhere from seed up to sort of Series B as well. The bite sizes, tend to be a lot smaller when you do seed types of rounds versus some of the private equity stuff that we do that are much more mature. But we're slowly building quite a bit of entrepreneurs, primarily in the US as well. But we tend to focus on Asia just because we're based here. So that's what I do every day, and I've been doing it for a very long time.
Oh, perfect, awesome. So as I was saying that you are having your plate full. As you know that COVID is unlike anything the world has seen so far. The things would be very, very different post-COVID. Based on your experience of investing and working with startups across multiple domains, what impact do you see on startup ecosystem and subsequent economic downturn?
Well, I mean, I think we can break, the startups into different categories because, it really depends, first of all, what stage the startup really is at, whether or not they're really a startup with an idea or they actually have traction with some revenue and things like that. And then what space they're in as well. So, I mean, I can give you some examples from our own portfolio. We, even during the COVID crisis, this has been about a month ago now, we completed an investment into an Indonesian company that's providing technology to basically co-op type areas for them to sort of digitize their services to their members. They have no revenue, they have nothing, and there was some concern, I think, from the founders that maybe we wouldn't complete because of what's going on. But in that stage of startup, it actually gives these two Korean kids who are doing this some room to focus on the technology side without any distractions from the business side. So in a way, they are taking advantage of this so-called downtime to really beef out their technology and accelerate that technology plan versus sort of getting a beta out or version 1 out and then testing it with the market and trying to please investors by getting revenue so soon, and then maybe encountering some technological platform issues that we all know happen when you build new software. And so I think for companies like that who have been able to secure funding and all in this hit before they even got off the ground, I mean, my advice, for them is just keep going, but focus, the energy on accelerating your IT development, because that type of stuff you can still do. We have another investment in Bangladesh that, amongst other things, provides sort of a platform for restocking as well as logistics for micro businesses. Now, for a company like that, of course, the lockdown was a massive problem because the whole logistics network and things like that, nobody can go out and the retailers are having issues. But what they did very early on was to pivot their product mix away from apparels and things like that to essential items, and sign some contracts with very large international, I can't mention, but very large international consumer product companies that are providing essential products. And what was sort of going to be, a small subcategory in their business going forward, they'll come out of this thing, with the traction they have, with this being, probably their second largest category, just because of the relationships that they've been able to develop. And of course, by shipping and providing essential products to the market, they were able to get a waiver from the government to continue operating. And so, for them, they're a little bit more entrenched. It's a little later stage, and they're able to pivot to really provide the services that there's demand for. And so if you're able to do that, then you should take advantage of that. And and they were very surprised at how much, and I think we were too, as to how quickly that they were able to ramp up into that product segment, and how they're looking at it now as one of the major segments, whereas before, as I mentioned, it was kind of going to be one of the many segments that they were going to be doing.
Awesome. So as you rightly said, that actually for different companies or a stage of the business they are, you have to have a different treatment. So I'll say that the COVID is already impacting different sectors, countries, and type of enterprises, as you rightly said. While it has come up as an opportunity for some, as you rightly mentioned, that actually those companies which are able to scale up and fine-tune their business models, typically most of the time digital enterprises, the old economy is suffering a little bit more. You cannot just make an aircraft disappear just because you cannot fly them for 45 days. So you see that actually for different sectors, there is a different, I'll say that overall opportunity or negativity. So based on, again, your experience, how do you see this panning out globally? And what are the specific sectors where you feel going forward it would be pertinent to invest, as well as the geographies it would be better to be in going forward?
So the interesting thing about this crisis is basically no country has been, not affected by it. Yeah, no country has been spared from a very severe economic tightening of activity in order to stop the spread of the virus. And so it's affected, large parts of the economy versus very specific parts like a lending part, or, in those days, subprime parts and things like that. And so that presents challenges in itself, especially when, if we're talking more specifically about social enterprises, we tend to work in developing nations who are very export orientated and, have very strong economic links to the rest of the world. And so even if those countries are able to get things under control so that they can open up their own local economy, they are still really dependent on the West, basically, the West's ability to control this virus and get their populations to comply with lockdown orders so they can stop the spread of the virus, so that they can, let people out again and start the economy again. And once that happens, then, those SMEs or larger companies can start reordering, goods to be manufactured in the countries that, we tend to operate in as social enterprises. And so from that standpoint, it's very important for, any company, and especially entrepreneurs in a startup environment, to really view this not on a local level, but to look at what's happening around the world and base your plan on sort of a global unlocking of the economic cycle versus just a very local one. And the really aggressive entrepreneurs who have aggressively changed their spending habits and their budgets early are the ones that are going to survive through this. And so, regardless of what anybody thinks, and I also don't know how long this is going to last, but what we're telling our companies is that you should plan for at least 6 to 12 months. I know maybe your governments are saying, oh, lockdown 1 month, this thing and that, but you're still really dependent on the rest of the world, for your local economy to continue humming again. And so when they start, so they, the good guys who are really on top of things started cutting costs very early on, reducing staffing levels, taking huge management pay cuts as well, focusing cash on investments in areas that, that would be the most effective right now. And basically making the assumption that they won't be able to raise more capital as per planned, if there was a plan within the next 6 to 12 months. I think from that standpoint, investors would tend to focus their future investments on companies that are already in their portfolio, like companies that need extra cash just to survive this. But you're going to find, a bunch of business models in the startup space and a bunch of entrepreneurs who are going through, basically like a first real crisis. And you're going to find a bunch of companies and guys who will not be able to manage through it. And the investors will be able to pick those guys out and those companies out very quickly. And so I suspect there's a lot of companies that will not survive it unless they have managed to raise enough money and are able to, have the foresight and the guts to really cut spending now, and just so you have enough ammunition coming out at the end of this thing. As for the sectors and things to focus on, it's very difficult, I think, at this point to make a guess as to whether or not we're going to come out of this thing as quickly as people hope we will. And I think that if it lasts 1 or 2 months, the human behavior probably won't change that much. Like, people will just go, okay, well, now I'll just, Monday nights I go to this restaurant and I do this and da da da. But if it really does last longer, and it's anybody's guess at this point, then the concern is that people will actually change their behavior, and to that extent, you don't really know what that behavior will change to. You can guess. Some people have bet on Zoom stock and things because they're betting that people have figured out that they don't need to travel as much anymore and that they can do a lot of stuff through video calls. In our portfolio, we've tend to try to stay away from anything travel related because we think that that's going to take a while for people to get comfortable to basically travel again and be in different countries and packed in airplanes and in hotels and crowded spaces. I think that behavior will take quite a while to come back. So what we've tended to focus on are, scooping up stuff that is in cyclicals, industrials that have been completely hammered in the market because we have a very long view. And other things that, tech businesses, like Microsoft, really shouldn't be affected that much. Visa as well. We're managing to buy them at prices that we wish we could bought them, at, that we never thought we'd have the chance to buy them at. And those are the types of, durable businesses that no matter what happens coming out of this thing, they're going to be very strong balance sheets. You want to stay away from companies that have a lot of debt right now because that market is being shaken out as well, even though the US Fed is basically underwriting every single loan that's out there right now. There's still going to be some shakeout there, and I need to focus on stuff that are sure bets with very small amounts of diversification. So that's just been my way I've always invested. Highly concentrated portfolios into companies that we have absolute confidence are going to do well in the next 5, 10, 15, 20 years.
Perfect. Awesome. In fact, I fully subscribe to your idea and what you're saying. So because actually I'm advising one company in Nepal, they are into the remittance business, digital remittance business. And initial 15, 20 days, they were going through a lot of pain, and they were literally had a heart attack. Deepak, the banks are not responding. I said, just wait for some time, and see to it that your revenues are going to increase, because this is a kill time for you. The next 15 days, close to 15th of March, the bank understood at least their core banking system need to work. So that kick-started. And now actually their business has increased by more than 200%. And in fact, now they'll be launching in 10 more countries, because a lot of customers who were remitting money, sending money to Nepal, now they said, actually, we like a system. Can we use your system? And I see them doing very well. So you rightly said that actually this is also a time where if you are man enough to stand, you'll do better than your peers because they won't survive. So that brings us to our third question. This is more of what you were saying, that the impact of COVID is just not economical. It is social. It is personal as well, because for 2 months lockdown, people would be still okay. 6 month lockdown, it will have a lot of mental impact on the people who are under lockdown, because we human beings, we are not actually the animal who like to be locked down. So in this scenario, how you and your organization, you as an individual and your organization, has changed due to COVID, and what you are doing to emerge as a better version of yourself in current difficult situations?
So we haven't changed anything. I mean, apart from not going to the office, but we haven't been going to the office for almost 2 months. We own Microsoft stock, so we use Microsoft Teams. We always use the products of companies that are in our portfolio. Our philosophies haven't changed. We went into this crisis with a large cash pile because, it's just difficult to find stuff to buy. And so for us, we look at the crisis as an opportunity to buy. We haven't sold anything during this entire swing. And we've been adding to positions. We've been, as I said earlier, we've been buying companies that we never thought we'd be able to buy that are just always on our radar. So we haven't changed at all. For me and my team, I think, I don't want to speak for everybody else, but for me, I'm an introvert to begin with. So staying at home and, reading and spending time with my kids and, we're all homeschooling and stuff is great. I love it. But I know people who are more extroverted, who are just going insane. And so I think that it really depends who you are personally. But as you said, we shouldn't discount the actual psychological damage that is being done. We've had cases in Singapore of people starting to throw furniture out their windows of their apartments and things like that. I mean, I laugh about it, but I mean, it's actually very difficult for a lot of people to be able to not have those social connections. And then, the 1 or 2 months, okay, but what about 6 months of not actually being in contact? It's going to be a little bit weird, going out again to, see people, and, will you be scared? Will you actually behave the same? But I guess, to answer your main question is, we haven't changed. The only thing we've changed is that we have calls like this, even though we're only a few kilometers apart from each other. We still work the same way. We still have access to all our tools because everything, we were lucky to move away from Bloomberg and onto like a US online research platform, so that we all had access versus having to have access to a physical Bloomberg machine. And so we've actually not had to make any changes to what we've been doing, which has been great. I mean, of course, it'd be nice to go to the office and not be at home all the time, but in the absence of that, it's not so bad. And I have other friends who are running, large retail businesses and stuff who are also using Microsoft Teams or Zoom or, whatever, at Google even. And, they're actually quite liking the process of managing their workforce through this platform, or these platforms that they're using.
Yeah, exactly. Like, sometimes what happens is that you are mentally a very, very different guy. And I'm not throwing furniture so far, but someone who is traveling 20 days, 15 days on the field with the farmers, I like to be with, like, what they're doing on the ground. They're seeing me, someone who's really trying to make an impact on their lives. And suddenly you see that, holy shit, 40 days you're not leaving out. And in India, actually, like, we are having something which is called curfew, not just lockdown. So, like, you cannot just move out of your house, right? So, like, even you're having 1 hour in a day to go and fetch the grocery, and you're not even allowed to, like, go to your terrace, because they'll be having drones to monitor that if you're on your terrace or not. And only, I think, great thing happened to me is that actually, like, I stopped smoking because there was no way of getting cigarettes. So that's a very positive impact. Yeah. So 40 days without smoke. So that's I'm saying that the positive part of it. Negative part is that actually for an extrovert person like me, it's always a little bit of a challenge. You become more irritated being home. But yes, I'm trying to control that emotion as well. So that brings us to, like, the final part of our discussion. For a scenario where actually for a pre-revenue company, a pre-revenue startup, right? What would be the one thing you would like to tell them in this scenario?
Well, I would just reiterate what I think I said before. I mean, if you're pre-revenue, and there's pre-revenue and have capital, and there's pre-revenue and you don't have capital. I think if you haven't closed your seed round and you don't have capital, I think it's going to be very difficult to get people to invest right now. I mean, because you can't meet them, and there's while we talk about being able to do everything by video, there is a certain amount of that can happen easily after you kind of know the person, which means you have to be really in contact with them to really understand. Do I feel comfortable with this person? I mean, the business plan is one thing, but do I feel comfortable that this person can execute? So if you don't have money, I think you're going to have to figure out like how to delay things, or friends and family to help you, raise a little bit of capital. If you do have capital and you're pre-revenue, as I mentioned, like the Indonesian company, this company called, they now have some breathing space to actually work on their tech. So every investment these days has a tech component to it. Okay, so it doesn't matter if you're opening a chain of grocery stores, whatever. Every business has some form of tech on it. So I would encourage you to really look at the tech rollout plan and bring forward some features or testing or things like that you weren't going to be able to do, because the IT companies, whether they're based in India, Sri Lanka, or in Singapore, most of those guys, for the work they do, can work from home. And so they can do coding from home, they can do testing from home, they can get access to the production and development servers, they can do all these things from home. And so that side of the work hasn't stopped. So we have a social enterprise in Singapore, Indonesia, Philippines that is tech enabled as well. And basically, we've got, new customers have gone to zero. This is a business that provides surveys to households, employees of companies. That's how we market it. But it's basically for households to determine, their levels of poverty in different areas of their lives. That has gone to zero because, you need to actually go and survey. But we had a rollout plan for different features that we were going to add over the next 12 months to help beef out the tech side of it, both the front end and the back end reporting side. And basically what we've done is we've cut costs, in the office and, and travel expenses and all this, and we're plowing all that budget into accelerating those features and testing and the tech platform, both front and back end stuff. So I'm just telling the teams to just, take the time to really, without having to worry about this presentation and that presentation, really just focus on what features and you need going forward, what you've gotten feedback from customers already, and let's come up with a plan to accelerate the addition or corrections of some of the features that are in the platform.
That's awesome. So Jason, would you like to add something other than what we have discussed so far, which you believe has been missed out before we end this call?
Well, I mean, we've talked about from the side of the companies and the entrepreneurs. I mean, if there are investors watching this, I would really, okay. So I would really encourage people not to take too pessimistic of a view of how long this is going to last, and to have some faith that, if you are about to do investments or were about to do investments into social enterprises, that you continue to do them. And in a strange kind of way, because, most investors have a very diversified portfolio. So most investors will have been affected by the drop in public markets as well. And in a very strange way, the sudden rise and sort of half recovery of the public markets have made it easier for the private side startups to, ask for money again, because the bargains just aren't there. The perceived risk is not as high either, but the bargains that we got, 3-4 weeks, ago, don't exist anymore. And so now investors like ourselves are looking for other areas to place capital. But what I would do is, what I would encourage investors to do is just really don't look at this as a permanent, thing, which is very easy for investors to do sometimes. Like, you think it's never going to recover and things like that. I've been through so many crises in my career now, but you will recover. You don't know what it's going to look like on the other side, but if you really believed in this entrepreneur and his business plan and the product just before this happened, the virus technically, shouldn't change those viewpoints, because once we get control of it and once the world, starts to go back to normal again, those products and services that just a couple of months ago you thought were so valuable to, you know, the target market and you really believe in the entrepreneur, just to, you know, have some faith that it will all work out at the end of the day, and to not starve these businesses of much needed cash when they can be using this downtime to be an even better version of what they plan to be at this point in time in their business plan.
No, that's an awesome advice, and I'll follow it through. I'll share one of the company I'm advising their pitch deck. It looks like, you know, the investors like you who are very, very sharp in identifying opportunities would love it. But I'll do that. And Jason, it was a real pleasure and a privilege to be talking to you. I'm very sure that the investor community, the startup communities, and entrepreneurs who would be listening to this basically web series would get huge amount of insights based on what we have discussed, what we have talked. Thanks a lot, and really appreciate from bottom of my heart. Stay safe. Thank you.
Perfect. Thank you very much, Deepak. Take care.